Good morning, everyone, and many apologies for the slightly delayed start this morning. It's all too boring. We've got some work being done at the house, and people turning up, and we had to sort of sort them out, get them out of our hair, so we can devote ourselves to this session of forex trading in the London session. Anyway. Before we start, as usual, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. This is a new series, as some of you may know. So we've got a lot of new people that have joined us, and for the benefit of those of you who may have not come along before, we're going to be looking at the charts, obviously, at forex pairs and the forex market, and we're going to be looking at them through what we call the prism of volume price analysis. It's a methodology that uses price action and volume to determine whether a price move is genuine. It helps us to look for reversals. It helps us to look for breakaway trades. It's not just the price action, as I said. It is actually volume, and volume is activity, it's participation, and if you combine those two together, not only do you have a pretty good idea of where the market is going next, which is something that we all want to know, but it also gives you confidence, because one of the things we have to develop as traders is to become consistent, and with consistency comes confidence. And we believe, David and I believe, that this is we think this is the only methodology that allows you to do that. Volume price analysis is not just that, it's support and resistance, it's candles, candle patterns, and time. And the best way to see it is obviously see it in action. Looking at the forex market, and really all markets, but the forex market is this is a concept that we developed maybe 6-7 years ago and started writing about it, and eventually put it into a book. And that is looking at not just the technical picture on the chart, which is where all traders start, to be fair, but also clearly taking account of what is happening on the fundamental side, and by that I mean news releases, etc. But also we took it one stage further, and that is we look at related markets, in the sense that there are 4 capital markets, as you may know. So the forex market, the bond market, the equity market, and the commodity market, and they are all linked. They all have relationships with each other, relationships within the markets, and how they interact and with the forex market is that certain currencies and currency pairs reflect what may be happening in another market. Sometimes the forex market leads, sometimes it's a confirmation signal. So as you know, as a trader, the days of maybe just looking at one time frame, one chart, and just being totally focused on that, and kind of ignoring what is going on around you, I think those days are pretty much gone. And we know they've gone because when we look at commentary on sites that the usual sort of market sites, forex sites, and they all talk about sentiment, they all talk about the bond market, they all refer to the equity market, and it does actually make David and I smile slightly, because as I said, we were talking about this stuff 5 to 6 years ago. Right, to help us, if you like, deconstruct what is happening in the forex market and actually see where the money is flowing to, because ultimately markets are all about money flow and risk and reward, and the flow into certain assets, certain currencies, tells you an awful lot. What is the sentiment? And as I said, sometimes the forex market can actually lead, in the sense that because it is the fastest market to react, so you will see a dramatic buying of maybe the Japanese yen or the dollar or the Swiss franc. So it would alert you something is going on, as it were. So what we've done, we've developed these indicators originally for ourselves, and now they're available. I know we have some of you who have invested in them. They're from Quantum Trading, and they also form part of our Forex program. We always start, there are 4 of them, but we always start with the one over here on the left, which is the currency strength indicator, which actually tracks as I said, the flows into the individual currencies. That tells us, what is being bought at the moment, what has been bought, and using it in multiple timeframes, it also helps you to determine whether we're reaching a point of what we call overbought or oversold. Is it time for a reversal? As we can see here with, this is the British pound. There was obviously strong buying the British pound, and then there was a reversal, bit of a flattening off, and then eventually it fell. By using them in multiple timeframes, it highlights potential trades. It also tells you when not to trade, because when the lines are moving in the same direction, the chances are that particular pair is in congestion. Then we also have the matrix, which takes that data and categorizes the strongest and weakest pairs. From the individual currencies. We have the currency array, which really measures the strength of trend in the pairs, and we have the heat map, which looks at all of the 28 pairs in multiple time frames, and it saves you looking at lots and lots of charts. But the best way to see all this in action is on the charts themselves. But before we do, I've just got a couple London is coming up now. What's happening on the fundamental side? Well, we've got Governor Bailey coming up at 8:30. We are moving towards the end of the month, so we've got other issues and factors to consider with end of month. It's also end of quarter, and that has quite big implications for fund managers who have to manage portfolios with equities and bonds. And some of you may have picked this up on articles. Essentially, as you know, there's been a sell-off in the equity market, being driven by all sorts of reasons. And I will go through the laundry list of reasons why things are the way they are, and the chances are that the volatility we're seeing at the moment is only going to increase. But to get back to equities, the end of quarter, fund managers, they are actually obliged to rebalance their portfolio. So if one asset class has outperformed and consists of a bigger percentage of another asset class in their portfolio, they are actually, I believe, obliged to sell, and what's called rebalancing. That is what is meant by rebalancing. Now, clearly, there's been since the big sell-off earlier on, because to do with the virus, US equities, or equities generally, have been on a bit of a tear. And that also will account for what is happening at the end of this quarter. Other factors you have to consider and know about: the Japanese yen, for example. The Japanese have a most curious way of invoicing their customers. They invoice them in their local currency. So when you buy, if you are a big importer of Japanese products, you pay for your products in your local currencies, euros, dollars, whatever it is. And the exporters build up these massive amounts of foreign currency, which they then come into the market and have to exchange. And they always do it in March and September. So not only do you have to look at the Japanese yen from the perspective as a safe haven currency, I do apologize, I don't know what's the matter with my machine at the moment, it's as a safe haven, but we also have to consider the time of year for the Japanese yen. And of course, we have the US dollar. The US dollar is very much in focus. It's a safe haven currency. It's really been very much about the dollar. Certainly yesterday, it's suddenly found a very strong bid, and we can see, I'll show you the dollar index. In fact, there's been more dollar buying this morning. Also bear in mind this week that I think we have 17 or 18 speeches from various Federal Reserve members. In fact, I think Jay is up today. I think the only day when he's not speaking is Friday. So clearly you have to know your central banks, and the most powerful is the Federal Reserve, and they are out there speaking every day. So it's there is a lot going, not many individual items of news, but a lot going on. Now back to the laundry list that I was talking about. What is happening? So we've got sentiment, and what is driving the sentiment? Well, obviously the US election is coming up fast. There's also the issue with the Supreme Court in America. You may know Ruth Bader Ginsburg died, so clearly there is now a vacancy on the Supreme Court. The Supreme Court is not necessarily politically neutral. The Republicans would very much like to fill her post with a Republican leaning justice. And you say, well, why is that important before the election? After all, we're going to have an election and, you know, things are going to be decided. It's important because this US election, nothing is certain about this US election. It's too close to call, and there are all sorts of things in the background. You may have read the issue with postal voting. You know, I won't go on and on about it, but take it from me, the US election, now you've got the this space that's come up in the Supreme Court, because if there is a dispute, what will happen is, if you have the Supreme Court, which has a majority bias towards the Republican cause, the argument is then, if there is a dispute, you know, it's going to favor the Republicans. That's what all this is about. The market really doesn't like this. I think somewhere there's I'll put the link up later. There is I think one of the big investment banks has already kind of war gamed different scenarios. You know, if there's a replacement, if there isn't a replacement, what will happen if there is a disputed election, and so on and so on. And we may not even get a result for the election the day after the election itself, because, you know, anything can happen, and probably will. And of course, at the back of all this, we have the virus. Obviously, clearly, it hasn't gone away. So there's an awful lot to, you know, to take on board. And you think, well, all I want is, I want a chart and I want to see a trading opportunity. Well, the indicators will certainly highlight a trading opportunity, but, you know, price action doesn't move in a vacuum. It moves against these, you know, within the context of what is happening around you, which is why, as I said, Dave and I have put together this we think, this very comprehensive program that pulls it all together for you. And, you know, by the time you come out at the other end, you have a pretty good idea of, you know, why things are moving in the way they do. And it all starts with the indicators, because, you know, all this is all fine and dandy, but we want to see what the market is doing at the moment. So I said it's about the dollar. Now, the dollar is quite interesting because, you know, you'll also read about the dollars that, you know, that's it, the dollar's finished, it's going to lose. It has a very powerful role in the world financial system. You know, many people don't like that, many countries don't like that, but it's with us for the time being. It's the currency of first reserve. It's the currency that that is used for safe havens. It's a safe haven currency. Thus far, it is the #1 currency. And what happens is, it is also influenced by politics, certainly in the States. You may have read, you know, when the dollar was rising quite strongly, Trump wasn't happy. He wanted, you know, the Fed to do something about it, because obviously, if you're an exporting country and your currency is strong, it makes your exports expensive, and nobody wants a strong currency, particularly if you are an exporter. Anyway, but to look at the performance of the dollar, we can see here, if I just expand this, this is the fall of the dollar since the beginning of the year. It had since May earlier on. It had a little bit of a rally there, but really it has been pretty much a downward slope since July, since the 97 region. It's not at its lowest that it's ever been. I won't go into the longer view for the dollar, because what is important is it's actually found a base at the 91 level here, and it's actually been moving sideways pretty much since July, because we have the volume point of control here, and we can see here it's going up and down, up and down, up and down, which is what happens at the volume point of control. It's you know, there hasn't been very clear bias for direction, and we also know this from the trend monitor. When it changes to these keeps flip-flopping out of these different colors, we know we are in a congestion phase. Now, this is the daily chart. Does that mean there has never been an opportunity to trade a major pair in this period? Well, clearly not. This is the daily chart, but it's something you have to be aware of, is looking at the structure of a chart on a slower time frame because it kind of gives you an idea of the trading conditions that you can expect in the faster time frames. Now, it's quite interesting. Yesterday was a very big update, and it's significant because it was actually an attempt to pull away from the volume point of control, and the volume underneath it was reasonable. We had a little bit of a pullback towards the end of the session, but this morning it seems the the bias is still to the upside, and we can see this on our, excuse me, that's one of my alerts going off. We can see this on the this is the hourly chart for the CSI. This is the dollar. This is yesterday's big rise. It did roll over a bit of sideways, as we sometimes happens in the Asian session, bit of a roll over, but now it looks like it's on the up. What's also interesting is look at the currencies that are following it, and that is the yen. The yen, as I said, we have this Japanese accounting, but the yen also acts as both a safe haven and a funding currency for risky assets. And we've also got the Swiss franc rising. So that kind of tells us, well, sentiment isn't all that fantastic at the moment. So we know these are the three currencies that are being bought at the moment. Well, what are they being bought against? And we just look at the other lines. And the nice thing about the CSI at the moment is we have this really nice divergence. What we don't want to see is lots of lines stuck in the middle, because we don't have very strong divergence, and it doesn't look as though very much is moving. Maybe it's waiting for some fundamental news, maybe it's the wrong time of the market. And that actually brings me to another point I want to make today, and this is quite an important point. Clearly, the dollar has had a big rise, which means certain pairs have had a big fall. And we're going to have a look at cable, because cable was the pair that I was looking at yesterday, and I've actually got some screenshots from yesterday. So you as a trader, you may have missed that move, and you think, oh my goodness, but I still think there's more, there's more selling pressure coming into cable. Now, how are you going to approach that? Well, there's a couple of things you have to be aware of. First of all, obviously look at the price action, because nothing ever falls in a straight line or goes up in a straight line. It will move, then it will go into a congestion, and then it will decide whether to carry on higher or lower. And I've got a really nice example of that for cable on the 30-minute chart. The indicators that we've developed will also help you, particularly the volume point of control, because after a big move, if the volume point of control then moves in the original direction, i.e. the primary trend, well, it also acts as it will also act as a support or resistance, and in this case, resistance to the move lower. And again, this is now the case with cable. Moving over to the array, what the array tells you is, if you put them all out here, these are all the 28 pairs, and you think, well, actually, let me just filter out the ones which are probably in the middle, where there is movement, but certainly not as strong as the ones on the extreme. And clearly, the pairs that have been moving the most, we've got here the dollar CAD, we've got the Aussie dollar, we've got cable. Aussie dollar looks like there's a nice big move on there, but we've got cable there, and we've got New Zealand dollar. So immediately, not only do you get to know what is going on from the perspective of money flow into individual currencies, flows into the various pairs, but it also gives you a mental picture of what you can probably expect to see on the chart. So, as I said, these indicators are not just, you just a quick glance and great potential highlight of trade. Also, as I said, what not to trade. You get it also gives you an expectation of what you are likely to find on the chart. So let me just have it, because cable is always such a great pair to have a look from a teaching perspective. First of all, what I also suggest, if you have these indicators, is just take a screenshot towards the end of the trading session, maybe this was, I think, was about 8:30 in the evening, and just to see what has been happening. I use the hourly chart, and it's where's my picture? Oh, there it is. I'm looking at the wrong one. There we are. Right, this was the situation yesterday, as I said, and this is up on my Facebook page, and we can see here clearly there has been some very strong buying in the dollar. They had been buying in the yen, and then that kind of rolled over because towards the end of the session, the indices and equities kind of perked up a little bit. There was very strong buying in the euro, but you know what I said? The majors. The best trade in the majors yesterday was not actually in euro dollar, and that's because the euro dollar and dollar were actually, as you can see here, were going up together. The best trade in the majors was actually in cable and also in the New Zealand dollar. But it gives you, says, okay, well that's what it was yesterday. And then just to bring up cable, which is the same one. Again, this is the 30-minute chart, and and as I said, I annotated it because it's on my Facebook page. And this, as I said, and then I use NinjaTrader not because I'm you can't do this on MC45. It's just the one big Ninja. There's lots of advantages to NinjaTrader, but the one thing which is fantastic, especially for highlighting points, is the time is in real time. It's in your local time, whereas with MetaTrader you've got to usually have to take off 2 hours, so it's a bit tedious. Right. Basically, here, this is what I'm saying. This is the 30-minute chart, so slightly slower than we look at, but it doesn't matter. Same principles apply. We have the volume point of control here in the 129.60. We also have a very, very strong level of resistance. This is from the accumulation and distribution indicator for Ninja. And what happens is this is only with Ninja, and also it'll be available on TradeStation. Every time the price hits a level, it will increase in thickness. So basically, visually, you know that the thicker this line is, then it is a really strong level, and for any price to go through there, it's going to have to go through with momentum, but it will also crucially need a lot of volume. This is what we typically see coming out of Asia. It'll go into congestion, then we have London, we have a little bit of an attempt to rise, ain't going to go very far because, as I said, we have these strong regions. The volume point of control is also acting as its own version of support and resistance. The volume point of control is volume, time, is volume, price over time. So we know that is marking out this congestion phase. Then just shortly after, this is 8 o'clock, a little bit time later, bang, volatility, lots of volume coming in, bang, bang, bang. Then we have this attempt to rise, and this is where VPA really comes into its own. I'm sorry, this is actually slightly covered by my commentary, but essentially what to look for in these corrections or pullbacks, which by the way, this is on the 30-minute chart, is you look at the volume underneath and whether that is, how far that is likely to correct. Now, if it's going higher and this volume is falling all the time, what is that going to tell you? Well, it's not going to go very far. And in fact, the following candle is a bullish engulfing. So we know that trend there is going to carry on lower. And that's how you look at whether it is, there is a possibility of rejoining the primary trend. You look at the volume, you look at the candle patterns, you also look at the support and resistance. This is only a minor support line here. So as a trader, you can either you can say, okay, depends on how aggressive you are. You look at that candle formation, you see these big, it's a bullish engulfing candle. You could say, okay, it's gone through this volume support area here. It's also approaching what we call a low volume node. Now, the histogram, when it looks very narrow, which is very narrow here, and narrow and not quite so narrow as this, but still narrower than this, which is where you have a congestion. These are really important because they also tell you that if it breaks through such a region, it is going to go through it very, very fast. And we can see this here. This is where we had a support line here. You can barely see it. It's just behind the one of the volume strips from the VPOC here. But you can see here so there was nothing in the way of volume support to stop that price falling. Plus, the price was every time the candle closed, every time the candle was being formed, the volatility indicator was triggered, which tells us that that move, and that move was actually outside of the average true range, and it did in fact find some support again on this minor support line here. So you as a trader, you think, okay, I'm either going to go on perhaps on a candle pattern, but you know what, a candle pattern is all well and good, but I just want to see from a support and resistance. I'm just going to wait to clear that low and then rejoin this move. You also have to be aware of the time, because time is really important when trading, and it's the time you want to take a trade, because all these markets, or most of the markets, are marketed, excuse the pun, as 24 hours, get in any time, trade what you like, whenever you like. But in reality, they are broken down into very specific sessions. So when a move has occurred and you've missed it for whatever reason, it's just not, it's not convenient for you to work or trade at that time. You may have other responsibilities. You may simply have to wait, because the key turning points, certainly in Forex, are obviously the open of the European Open. We have, the European Open is about here. It's about 7 o'clock in the morning. The London Open. Then you have this sort of mid-morning period, and things will start to then quieten down just before the US Open. So you have the US Open, and you also have the London Fix. So if you like, you could actually structure your trading day around these specific sessions, and then you know that if something has happened and for whatever reason you're not there to take advantage of it, then that's fine, because something will happen, something will turn. It always does at these particular times. Just to finish up on a cable, I think David's going to be looking at the faster charts. I've just decided to look at the slightly slower charts today, because I want to put this price action into the context of what we're seeing at the moment. So this was the move, as I said, this was the move low, which we saw on the image. As I mentioned earlier, where the VPOC is and how it's a dynamic indicator, it will move. It doesn't stay in one place, all the time. As I said, this is the 30-minute chart, but you could be looking at a 5-minute chart, 1-minute chart, etc., etc. It was up here, if you recall, for the image. This was the move lower. This was the attempt to rally. I have also to say, this is the 30-minute chart. If you're a scalping trader and you are on Renko charts, or you're on 1- and 2-minute charts, you may have taken a position to the long side in this move higher, but you have to be aware that you are going against the primary trend, which was lower. It all depends on what the indicators are telling you. Those of you who have the CSI, because it will be picked up by the CSI, and you would also always be looking at multiple time frames. So you may be on the 3-minute chart, you may be on the 5-minute chart, but you must have a benchmark chart. You must have a chart similar to, maybe the hour or maybe the 30-minute chart, because you will see the move coming to an end, and you will look at the volume and you think, you know what, I've had a good run, I've taken a few pips. I think this was about 30, 40 pips. So, it could be worth taking. Then we had the resumption of the move. And as I said, on the image, we saw the attempt to base, as we saw here, in about 127.90. But what has happened is the VPOC has moved lower. All these levels are in, so we've got a strong level there, we've got strong levels there, we've got now, and now it looks like we've had another leg lower in this original move that started yesterday morning. And we also we become aware of what was this week's low. These are key things to bear in mind. I've got the Camarilla levels on here because they help to give some hierarchy to these levels, but it's what the price action is, what the volume's doing, what your levels are telling you, based on volume and price, and you trade what you see on the chart. So that's what cable is doing at the moment. We've had a move lower. It has it's reached the S3. The S3 sometimes does actually present an opportunity for a reversal, but we will have to see. I've also got the Renko. Let me just refresh this one. Let's go to 60-second. Let's have a look. What's the value of the bricks? 4.5. The brick value that is generated by the indicator also tells you what kind of momentum we're looking at, and the bigger the value, then the kind of market is slowing down a little bit as well. So these indicators, they give you a lot of information of, not only about what is moving, what is not moving, but whether the move is likely to be a fast move or, it's going to be a bit of a grind. And certainly any reversal to the upside is always a grind. But there we are. There we are. That's the look at that of that piece of price action based on Renko. We had a nice congestion phase. This actually started lower just at in Europe. 7 o'clock is the start of Europe, and now we've reached the S3 with a potential to reverse. And don't forget, the London session is always a great time for the insiders and market makers to trap you into onto the wrong side of the market. Right, I'm going to stop there. I'm sorry it's been a bit longer than I normally, but there's lots of things I wanted to pass on to you. I know David's been looking at some nice moves on your behalf. I'm going to stay with cable. It's one of my the British pound is I pretty much focus on the British pound these days. In fact, I've set them up in individual pairs, which you can do with the CSI. You just put the currency pairs that you want to trade either underneath the chart itself or on a separate chart, and it kind of blocks what's happening in other currencies, because sometimes when your currency pair isn't moving, oh, mine's not moving, oh dear, I should, it takes away what I call trader regret. Oh, there's, I'm a cable trader and look, I've missed this wonderful trade over in, I don't know, euro dollar or what have you. It just helps with to keep your mind clear, as it were. Right, over